Liquor manufacturer Radico Khaitan continued strong growth in Q3 FY20, benefiting from an expanding distribution network and new product launches. Let's do a three-point analysis to really understand the earnings fine print and also the outlook on the company. 1. Q3 result highlights. Well, if you see, Radico Khaitan's revenue growth of 17% was driven by strong offtake across both premium and non-premium segments, that is regular and also the others. Now, the IMFL volumes grew at 14% on a year-on-year basis. Now, in Q3 FY20, the premium segment volumes jumped 21%, while the popular segment volumes also increased by 11% on a year-on-year basis. Margins were under pressure as the increase in raw material prices continued to have an adverse impact on the margins. Now, introduction of cow cess in UP and also the credit loss provisions definitely kept the expenses also at elevated levels. EBITDA grew at 7% to 103 crore rupees. Radico's operational performance was definitely aided by new product launches, that is 8 PM Premium Black Whiskey and also 1965 The Spirit of Victory Rum. Now, Radico's strategy of premiumization seems to have been working well for the company, as the contribution of prestige and above have also inched up from 27% to 29.5%. 2. What are the other observations then? Well, the management has indicated that the margins are expected to consolidate around the current levels as the input prices appear to have really peaked out at the moment. Now, India's sugarcane output for 2019-20 has also declined sharply, but the country is likely to witness a record food grain production this year owing to heavy rains during the last monsoon season. Now, molasses prices also could see some bit of correction post the harvest of the Rabi crop in April-May 2020. Radico's interest expenses definitely have inched up again sequentially due to the slight deterioration in the working capital. Now, cash flow from operations have also been weak throughout 9 months FY20, as liquidity challenges in the trade channel is also resulting in a longer receivable cycle. Consequently, the net debt has also increased from 315 crore rupees to about 360 crore rupees in December 2019. Now, given the current market environment, the company now expects to be debt-free by FY20 to end rather than FY21. 3. What's the outlook going forward then? Well, the demand prospects for the liquor industry seem to be quite promising, as the alcohol consumption has been increasing each year regardless of the business cycle. However, the near-term challenges such as the slowdown in consumption, increase in the kind of taxes that we are seeing, as the introduction of the cow cess we have seen, and also continue to be looming on the sector. Now, Radico Khaitan has been an outperformer in the industry in the recent years. Its volume numbers have also indicated that the company has been capturing the incremental market share against the larger competitors, that is United Spirits or even Pernod Ricard. Now, for FY20, the company is also on track to deliver volume growth of 9 to 10% and margins of 15 to 16%. The stock has already seen a sharp up move post the quarterly earnings and now trades at 26 times FY20 estimated earnings. Long-term promises to be definitely good, and investors should look to build gradual positions in the stock, as deleveraging as well as the portfolio premiumizations definitely remains the key trigger for the growth for the company and also for the stock re-rating going forward.